In the world of tech, sometimes one single move can completely change the game. Today, we're going to break down a massive acquisition that's creating a brand new industry powerhouse. Okay, let's get right into it. And it all starts with one very, very big number. Wow, $2.35 billion. Think about that for a second. That's the enterprise value of this deal. A number that big doesn't just buy you a company, it signals a huge strategic shift in the entire market. So what exactly went down?
All right, mark your calendars. On December 28th, 2025, the news dropped. A deal was signed that is absolutely poised to reshape the digital services landscape as we know it.
So here's the headline. Coforge, who's already a huge player in global digital services, announced it's buying Encora, a company that specializes in AI-driven engineering. Now, this isn't just two companies merging. It's really a fusion of massive scale and pinpoint specialty.
So who are these two companies, really? I mean, to get the why behind that multi-billion-dollar price tag, you first have to understand the who.
So on one side, you've got Coforge, the buyer, a well-established global leader. And on the other, you have Encora. They were born in Silicon Valley and built from the ground up to be an AI-native engineering firm. It's a classic story, right? A giant buying a specialist to get a serious, critical edge.
This quote really gets to the heart of why Encora is so valuable. They're one of a very select few AI-native firms. So what does that actually mean? Well, it means AI isn't just some service they added on later. No way. It's their entire philosophy. They build products around data and machine learning from day one. And that's a fundamentally different and way more powerful approach. That unique DNA, that's exactly what Coforge was after.
And where does Encora put all that AI expertise to work? Well, mostly in high-tech and healthcare, two of the fastest-growing and, frankly, most competitive sectors on the planet. This gives Coforge a much stronger, more specialized position, right where it matters most. Geographically, Encora is an absolute powerhouse in the Americas. A staggering 80% of its business is right there. This gives Coforge an immediate and massive boost in the world's biggest tech market. So, now that we see the strategic fit, let's look at how it all translates into financial value.
Let's talk money, because a deal this big has to make financial sense, not just for the companies, but especially for their investors. So how does this whole thing actually create real, tangible value? Well, it all comes down to one key concept.
The deal is what's called EPS accretive. Okay, in simple terms, this just means that after the merger, the new, combined company is expected to be more profitable for every single share. It's pretty much the main goal of most big acquisitions, and it's a huge win for shareholders.
And here are the numbers that make the case. You can just see the power of this combination. Revenue is going to jump to over $2.8 billion. Profit after tax climbs up to $283 million. But look, look at that bottom line for investors. The earnings per share, the EPS, is projected to go up. That is the accretion we were just talking about, proven right there in black and white.
Okay, so beyond the balance sheet, this deal creates a new titan in the tech services world. Let's take a look at the sheer scale of what this new combined Coforge is going to be. The new company is going to have a global workforce of approximately 44,000 people. That is an army of engineers, developers, and strategists, all working under one roof. This map here shows you that expanded global footprint. And a huge strategic win is the addition of about 3,100 professionals in Latin America. That's a rapidly growing and super strategic tech talent hub. This diversifies their delivery model, and it brings them much closer to their massive client base in the Americas.
And of course, more talent means you can service bigger clients. This chart shows the growth in clients that spend over $10 million a year. The combined company now has 45 of these high-value relationships, which gives them a much more stable and scalable revenue base.
All right, let's pull it all together. What's the big picture here? Why does this merger really matter? Beyond all the impressive numbers.
At the end of the day, it's pretty simple. Coforge didn't just get bigger, it got a whole lot smarter and more strategically positioned. They've created a nearly $2.5 billion leader, they've supercharged their AI and data capabilities, expanded into critical new markets, and they've deepened their hold on high-growth industries.
And this right here, this is the ultimate takeaway. The new Coforge will generate over $2 billion of its revenue from the three most important areas in tech today: AI-led engineering, data, and the cloud. This instantly makes them a dominant force in the services that are going to define the next decade of technology.
Which leaves us with one final, pretty provocative question. You know, in the high-stakes chess game for global AI dominance, acquisitions like this are power moves. So the question we're left with is, has Coforge just positioned its queen on the board and declared checkmate? I guess only time will tell.